Hey, good morning, everybody. Today is Wednesday, October 28th, 2015. My name is Cliff Backus, and this is your pushbuttonstocktrading.com daily video market review. Stocks traded in a narrow range again yesterday, closing lower on heavier trading volume. Stocks closing lower on heavier volume is the general definition of a distribution day. And while the S&P 500 recorded a distribution day, the NASDAQ didn't fall the minimum 0.2% necessary to trigger distribution. The strict definition of a distribution day is any session when one of the major averages closes down at least 0.2% on heavier trading volume than the prior day. Distribution is a sign of professional selling in the market, and too much distribution in a short period of time can be an indication that the current uptrend is in trouble. That noted, both the NASDAQ and the S&P held significant support levels yesterday. Both have advanced over 11% since their September lows. Market leadership appears to be getting a bit more focused, with building/real estate investment trust, financials, internet, consumer, and airline stocks setting the pace. Declining issues bettered advancers by nearly 3-1 yesterday. New lows bettered new highs. Large capitalization stocks outperformed small again yesterday and are outperforming on a 10-day moving average basis. Large caps outperforming is behavior less typical of a bull market. Our swing timing model is showing a short-term neutral condition in the market. Our market timing model for both the NASDAQ and the S&P 500 remains on a buy signal, indicating that aggressive traders should not be increasing margin on their portfolios. Maintain current margin levels and let your trailing stops take you out of your current positions. More conservative traders can continue to redeploy capital on the long side, keeping stops in place. The O'Neill market timing model is in a confirmed uptrend. Distribution or professional selling is beginning to pile up. The NASDAQ has 5 distribution days, the S&P 4 since the follow-through day on October 2nd. That distribution is starting to become a concern. All of our timing models are bullish, but the market remains volatile and prone to whipsaws. That being the case, we're now over 3 weeks into the confirmed uptrend. With distribution becoming a concern, traders should be nearly fully invested, but keeping your stops in place and being sure to follow your written rule sets. Okay, let's take a look at our spectrum analyzer. What we're looking at here is the HGSI, High Growth Stock Investors, universe of over 8,000 stocks, sorted by a combination of the most powerful stocks and the most powerful industry groups. We've made a group of the top 100 stocks in that sort. Let's plug those stocks into our spectrum analyzer and see where the strength in the market is. Yesterday, of the top 100 stocks in our sort, 11 were from the semiconductor industry. 8 were from the real estate investment trust, 8 biotech, 4 medical equipment, 4 defense primes, and 4 lodging stocks. I want to start today with a look at the Russell 2000. The reason I want to look at the Russell is notice how we've made a series of lower highs and lower lows. Lower high, lower low, lower high, lower low, lower high, lower low. And right now, we have another lower high with resistance in the 1170 area. The Russell is in a clear downtrend with support down here in the 1079 range. Right now, the Russell's very weak, in contrast to both the S&P 500 and the NASDAQ, which have been a little bit stronger. This type of divergence can be a concern to the bulls. Let's take a look at the NASDAQ. Yesterday, the NASDAQ composite was down 4.55 points, or 0.9%. Notice how trading volume was higher than the prior day, but because the NASDAQ was down less than 0.2%, the selling didn't rise to the level of a distribution day. The NASDAQ yesterday closed at 5030. And the NASDAQ held this level of support. This is the trend line that the NASDAQ had been following prior to its breakdown back here in August. This is a fairly important support level. I would hope that we can hold that level. Yesterday, as mentioned, trading volume was higher than the prior day, but didn't rise to the level of distribution. For you followers of William O'Neill, we are in a confirmed uptrend on the NASDAQ. We have been since October 2nd. Right now, the NASDAQ has 5 distribution days since that follow-through day. That's a lot of distribution, but several of these days have come on very weak comparisons, and that may mitigate some of the distribution that we've seen. For the time being, the NASDAQ is bracketed by support right here at this trend line, and resistance up here in the 5164 area. As noted, the NASDAQ has diverged from the Russell 2000. We'll see whether the NASDAQ can continue its strength. Our market timing model on the NASDAQ is on a buy signal, which indicates that aggressive traders should not be increasing margin on their portfolios. Maintain your current margin levels and let your trailing stops take you out of your current positions. More conservative traders can continue to redeploy capital on the long side, keeping stops in place and keeping in mind that we do have a lot of distribution, so you may want to be a little bit cautious on the long side. Let's see what the S&P 500 is up to. S&P 500 yesterday was up 5.29 points or 0.26%. Trading volume was higher than the prior day, giving us a distribution day. The S&P closed at 2065, but held this support at the 200-day moving average, which we show in black. Right now, the S&P 500 is on a confirmed uptrend, has been since October 2nd, with 4 distribution days. The distribution count for both the S&P 500 and the NASDAQ are beginning to creep up there and become a concern. Right now, the S&P 500 is bracketed by support at its 200-day moving average. We'll call support the 200-day for right now until the S&P 500 breaks down below that level. Resistance would be up here at the old high in the 2034 area. We are on a buy signal on the S&P 500. That's about all I have for today. If you want to talk about any of the stocks mentioned today or any of our market strategies, please feel free to give me a call, drop me an email, or make an appointment. Come by the office, see what we're up to. Contact information is on the homepage. You can also follow us on Twitter at PushButtonStock. Again, my name is Cliff Backus. That's your daily video market review. Have a safe and profitable day. Keep your stops in place, and I will see you again tomorrow. Please stay tuned for our important disclaimers. All the best. Disclaimers. Push Button Stock Trading Video Market Review is produced and edited by Clifford B. Backus. Mr. Backus is a Senior Vice President of Investments, Technical Analyst, Portfolio Manager, and Partner with the investment firm of Ohannes & Liqueurs, Incorporated. Video Market Review is produced solely for the benefit of our clients, friends, and colleagues. Anything written, stolen, and/or plagiarized in this publication is done without malice. Further, the analysis and opinions expressed in this publication are strictly those of the editor and not of Ohannes & Liqueurs, Incorporated, its affiliates, subsidiaries, or any of the officers or employees of Ohannes & Liqueurs, Inc. On that note, we submit the following. The analysis, calculations, and evaluations presented herein are based on data and assumptions Ohannes & Liqueurs, Incorporated believes to be accurate. Ohannes & Liqueurs, Incorporated makes no representation that such analysis or calculations are accurate or that such valuations represent levels at which actual trades may occur. This report has been prepared from original sources, except where otherwise noted, and data we believe to be reliable. Ohannes & Liqueurs, Inc., its affiliates and subsidiaries, and/or their officers and employees or their families may from time to time acquire, hold, or sell a position in the securities mentioned herein. Moreover, Opinions may differ from one entity to the next. If we are used in connection with the purchase or sale of any security discussed in this report, we may act as principal for our own account or as agent for both the buyer and the seller. Push-button stock trading is dedicated to the education of friends, clients, and paid subscribers. Push-button stock trading is an information service only. The information provided herein is not to be construed as an offer to buy or sell stocks of any kind. Push-button stock trading is created to aid subscribers in making informed investment decisions based wholly or in part on technical analysis. It's possible that at this time or some subsequent date, the editors of Push-button stock trading may own, buy, or sell the investments presented. All investors should consult a qualified professional before making any investment. The information provided has been obtained from sources deemed to be reliable, but it is not guaranteed as to the accuracy or completeness. The editors of Push-button stock trading make every effort to provide timely information to subscribers, but cannot guarantee specific delivery times due to factors beyond our control.